Welcome back to Outside Views, and today we're talking about one of the great political cruelties of our time. The NHS funding crisis being amplified and exacerbated by the economic fallout from Brexit. And isn't that irony? My strong personal view is that the promises made by the advocates of leaving the EU were malicious fantasy, and the idea of a Brexit dividend for the NHS has been replaced by an enormous self-inflicted economic wound that is choking the life out of the UK's most cherished public service. And this isn't a theory here, it's now a grim, demonstrable economic fact backed by the UK's own central bank and leading global institutions. The UK National Health Service is now competing for a shrinking slice of the national pie compared to what was expected, and the consequences are measured in cancelled operations, striking doctors, and desperate cuts to social care. But let's start with the big undeniable truth. The core premise of the Brexit dividend was a lie. The promise was that stopping the UK's contribution to the EU budget would free up money for the NHS. You know, the famous red bus, £350 million a week for the NHS, which was a lie from the start, but people believe that nonsense. But economic institutions, including the UK Treasury and the Office for Budget Responsibility, warned that the economic damage from leaving the EU would far outweigh these savings, that were much lower than the £350 million a week, by the way. And nearly a decade after the vote, we now have the data to prove their most pessimistic forecasts were actually underestimations. A new report from the UK and German central banks, alongside leading US and UK universities, using sophisticated methods to isolate Brexit's impact from other global events like the pandemic, confirms the staggering damage. By 2025, the UK's gross domestic product, that's the total size of the economy, is estimated to be 6 to 8% below where it was expected to be on its pre-referendum trend. So we are far ahead of the 4% we mentioned all the time before. And to put that catastrophic figure into context, this economic hit translates directly into a crushing shortfall in public finances. The House of Commons Library estimates that the hit to the tax base from lower corporate profits, reduced employment, and depressed wages amounts to a loss of around £90 billion each year, compared with the Remain scenario. Compare that to the UK's estimated net payment to the EU, which was less than £6 billion a year before the referendum. So, the country swapped a £6 billion payment for £90 billion annual revenue black hole. And that is the true Brexit dividend for the NHS. A smaller economy means a smaller tax base, and a smaller tax base means less money for public services, full stop. And despite successive governments attempting to ring-fence the NHS, its financial situation is dire. The latest spending review granted the health service a 2.8% annual real terms funding increase, which sounds okay until you realize that this is below the long-term trend and is immediately being devoured by soaring costs, high inflation, and the vast overspending accrued under previous governments. And this budget pressure is a scourge permeating every part of the health and social care system. Resident doctors are still engaged in sustained industrial action and strikes over pay and the scandal of high unemployment among newly qualified doctors, which, with the full walkouts announced as recently as November 2025 once again. And the doctors are striking because despite the government's claims of generous settlements, their pay is still way down compared to 2008 in real terms, and the government has not offered the radical plan needed to restore pay and training places. Health trusts are now reportedly resorting to desperate measures like freezing recruitment or cutting clinical staff just to try and balance their books, all while progress on the massive patient waiting list is agonizingly slow and set to miss government pledges. And the situation in adult social care is even more catastrophic. It is the part of the system that often gets hit the hardest when public finances are tight, even though it is vital for relieving pressure on hospitals. And successive governments, despite making big promises to reform the system that leaves tens of thousands without adequate support, have been forced to abandon those reforms, diverting every last penny just to keep a threadbare service barely surviving. And in a truly tragicomic example of the fiscal crisis, a plan to cut costs by firing NHS oversight staff was actually delayed for months because the system literally did not have enough money for the redundancy payments. And this is not an example of good management. It's a vivid illustration of a system running on fumes, paralyzed by the economic constraints imposed by leaving the EU. And the final insult is that the government's attempts to close the fiscal gap, such as increasing employers' national insurance contributions, simply circle back to hit the NHS directly, adding hundreds of millions in costs for social care and general practice. And beyond the funding hit, Brexit has created entirely new and complex risks for health and social care. The UK is now outside the European single market, and trade in vital supplies like medicines has slowed. While medicine shortages are a surge across Europe, the UK has been hit hard, and crucially, it's now excluded from the EU's growing agenda to collectively manage shortages and expand factory capacity across the continent. The UK is now forced to negotiate for supplies as an external entity, making it a less attractive first stop for global pharmaceutical companies facing a supply crunch. On the workforce side, the government had to open its visa system to non-EU health and care staff to compensate for the decline in EU workers, which led to an unprecedented influx of doctors and nurses. But this system is inherently fragile because the government has full unilateral control. Earlier this year, the government abruptly ended international recruitment for care workers, despite the sector being desperately reliant on that migration and facing falling numbers of domestic staff. And this highlights the dangerous instability. Political decisions on migration, driven by the desire to cut overall immigration figures, can now override the critical staffing needs of a crumbling health and care system, and with that, directly worsening the crisis. And the sad reality is that both the government and the main opposition seem trapped in a state of political paralysis, unwilling to address the elephant in the room. And that's the fundamental economic disconnection from the EU that is the root cause of the shrinking funding pot. And even as the economic consensus points to a 6 to 8% GDP reduction caused by leaving the market, there is still little open discussion in the mainstream political discourse about reconsidering the UK's general disconnection from EU markets and institutions. Ministers only tentatively, and usually when speaking to international audiences, seem willing to implicate Brexit in the country's plight. But this lack of political courage means that the UK is guaranteed to keep repeating this cycle. We've talked about SAFE this week already. And this year's autumn budget is just one in a series of future budgets where health and social care will be forced to compete for a funding pot that is tens of billions of pounds smaller each year than it would have been if the country had remained a part of its largest and most stable trading bloc. The health of the nation, literally and economically, is being sacrificed on the altar of political ideology that has been proven decisively wrong by the very economic figures it promised to improve. And the NHS is not just facing another hit, it's facing a structural decline that cannot be fixed until the core economic damage is addressed. And if you want to know more, the next video is right here in the end screen.